Month for 2021. We apologize for the brief technical glitch which we encountered, but hopefully everyone has managed to successfully log on to this webinar. My name is Gerald Mwandiambira, and I'm the CEO of the South African Savings Institute. And we welcome you to this year's July Savings Month media campaign. And we hope to have many conversations and engagements with all of South Africa around your finances. Now, one of the biggest ways of financial exclusion is simply language. And therefore, our theme for this year is saving in your language. We want to communicate around money and savings in your vernacular language, in whatever language which you understand. We encourage you to engage with us and to communicate and have that money conversations through the month of July. Now, for this program for today, we just want to welcome everyone and essentially set the theme for the month ahead. And to start off our program this morning, we have the Chairperson of the South African Savings Institute, Ms. Prem Govender. And just a bit about Prem. She's a professional accountant and a CFP professional, and Prem is passionate about encouraging people to adopt good money habits and embrace that culture of saving. And to this end, she chairs the board of the South African Savings Institute and is also a trustee on the Financial Services Consumer Education Foundation, which was set up by the Financial Sector Conduct Authority. Now, both organizations are dedicated to promoting financial literacy and encouraging saving and debt management amongst all South African consumers. Prem previously served as a member of both the FSB's long-term insurance and phase advisory committees, and she's a former chair of the Financial Planning Institute as well. And we just want to welcome Prem. She's a long-serving member of the South African Savings Institute, and also we celebrate 20 years of SASI this year. And over to you, Prem. Prem, you need to unmute.
My apologies. I think that's the most commonly used word today, unmute. Good morning, Sanibona, Goeiemorgen, ladies and gentlemen. What a pleasure to say welcome to each of you as we launch yet another Savings Month campaign. Nationally recognized July Savings Month is synonymous with the South African Savings Institute, or SASI, as we fondly call the Institute. And we are proud to boast 20 years of being in existence. We are even prouder to be the only independent voice of savings in the country. When I was giving thought to what I would say this morning, I decided against sharing depressing data with you. Data that we normally use to highlight the dismal savings rate of South Africans and how indebted they are. But right now, nothing matters except the scramble to survive financially, with many people holding on to their jobs by a thread. Each time tighter restrictions are announced, a few more people find themselves jobless. Can we then honestly take to the podium and berate South Africans for not saving sufficiently? Instead, I decided to take a very long walk down memory lane. And if you will indulge me, I would like to share with you a brief history of SASI, as well as a few anecdotes from past launches. As you are all well aware, the organization did stem from a then very concerned Minister of Finance, Mr. Trevor Manuel. His concern was for our rapidly decreasing savings rate with an equally rapid increase in personal debt amongst South Africans. And so SASI was born, not with any funding from Treasury, but from the generosity of Access and the IDC. Standard Bank also came to the party by seconding one of their executives to act as the first CEO. This then was the start of many campaigns, roundtables in collaboration with the South African Reserve Bank, and much research which was useful in keeping tabs on what South Africans were up to with their money. When I joined the organization as a director, aside from the roundtables and research, there were 3 very active campaigns, namely July Savings Month, the Varsity Financial Literacy Campaign, and the Festive Season Savings Campaign. An institute such as ours has always been and still is totally dependent on funding from financial institutions with whom we partner to run these campaigns. At this point, I would like to acknowledge past sponsors, among these Nedbank and Old Mutual, who were major sponsors of our events in the past. Sadly, whether it was just a sign of the times or lack of appetite for what we did, sponsorships were very difficult to come by, resulting in the demise of all that we did, except, of course, the July Savings Month, kept alive for the past 4 years by the generosity of Absa Bank, but more of that later. This flagship event continues to be extremely popular in the media, both print and digital, and it is not surprising that most, if not all, financial services providers jump in around this time of the year, promoting the savings message, and we love it. Not only because it gives credence to what we do, but it certainly makes people sit up and take notice. And ladies and gentlemen, this is exactly what it is all about. It's about reminding consumers to relook at their money habits, reminding them to assess their debt situation, and mostly to become aware of how important having a savings culture is to both their mental and emotional health, and of course, their physical health too. I have fond memories of getting up at the crack of dawn in the middle of a chilly Johannesburg winter and dragging myself to the IDC auditorium in time to greet our esteemed guests together with the then CEO, Elizabeth Nanziri. Remember, I come from sunny Durban, so it meant a plane trip the day before and an overnight stay, and in clothes that are certainly not adequate for the Joburg cold. Remember too that none of us as directors get paid to do this, but we do it because we have a burning passion. So in keeping with the fact that the Minister of Finance initiated this, we always strove to have either the minister or his deputy as our keynote speaker at the launch. Another reason for this is that having either one of them there meant that there would be more interest from the media, and this is what assists us to spread the message of saving far and wide. We were very fortunate to have, on the occasion of our 10th anniversary, the then Minister of Finance, Mr. Praveen Gordhan. Needless to say, we were all agog and had a full auditorium with every space for journalists taken up. We were expecting the minister to arrive at the appointed time, or perhaps a little later. Not so this minister. He arrived an hour before time, and we were scurrying around looking for a holding room for him. Guess what? He duly arrived, dismissed the need for a holding room, saying that he had had enough of holding cells during the apartheid era, and insisted on mingling with the steady arrival of guests while sipping on rooibos tea. The highlight of that event was that he did indeed listen to our plea that Treasury look into further tax incentives to encourage saving. And soon after that, the tax-free savings initiative was launched, and we all know how popular that has now become. We have also been honored by the presence of Minister Nene and Deputy Minister Incentivising Jonas. On this topic, I have to share this funny story with you about the time Minister Nene graced our function. As was customary, the chair and CEO would stand patiently at the imposing entrance of the IDC offices, waiting to greet our guest of honor and escort him to the auditorium. So there we were, waiting and waiting and waiting, and no minister at the allotted time. Wouldn't my cell phone ring just then? I ignored the first call, but decided to see who it was when it rang a second time. And a good thing I did. It was another director calling to say that the minister has arrived and is actually in the auditorium. And so he was already at the podium waiting for us to start. While we waited to greet him, he made his way to the auditorium after parking underground, hence bypassing the main entrance. He dismissed our apology by saying there was no need for pomp and ceremony on his account. Quite refreshing. To this day, we try and get someone from Treasury to grace our launch, and this year is no different. We are honored to have Basil Maseko, Chief Director, Savings and Investments, and I can't wait to hear what he has to say. Welcome, Basil, and thank you for availing yourself. A special thank you also for all the efforts you went to in the past to get either the minister to our event, or his deputy to our event, and failing them, some senior person from Treasury. You and Olano Makubela were amazing. Thank you. Over the years, as the dynamics changed, so too did we. And we started to lean more towards moving away from being perceived as elitist and taking our launches to the people who most needed to hear the savings messages. And then COVID-19 struck, very quickly turning into a pandemic and then lockdown. And of course, it was technology to the rescue. Thank goodness for technology. I can honestly say that the lockdown, having forced us to change tack, we probably had the furthest reach last year in terms of the interest our webinars generated. Oh, what fun we had with the attendees, and that interactive engagement saw a lot of burning questions being answered. At last, people were able to ask questions knowing they were getting instant answers, and this just made for very productive sessions. Having learned some valuable lessons from our first remote engagements, we would like to think that we have a treat in store for the South African public this year, but more of that later in the program. Just as the needs around Savings Month have changed and evolved from our humble beginnings 20 years ago, sadly, so did the appetite for collaboration with SASI during Savings Month. Just when we thought we were never finding a sponsor, the big red bank with an even bigger heart stepped forward and have now collaborated with us continuously over the past 4 years. I still remember the first meeting I had with Thami from Absa and wondering how this was going to work. Hard to believe that 4 long years have passed. I remember it like yesterday and how successful this partnership has been in that time. Absa have been truly amazing, from allowing us to use their auditorium in the first 2 years of the sponsorship, to getting truly excited about the new way of doing things last year. Thami and his team simply rolled up their proverbial sleeves and got moving with things. Thami, to you and your fabulous team, many, many thanks for your hard work, wise counsel, and gentle guidance. It has been a privilege working with you guys. To you, our guests, may I say how grateful we are that you took the time to honor us with your digital presence today. This day couldn't happen without you. In particular, I would like to thank the media in advance for the coverage they will be giving Savings Month during this period and well beyond Savings Month as well. Who is to know where and when this pandemic will allow us to go back to normal? And of course, who knows what that normal is going to be? Until that happens, let us continue to spread the savings message yet again in 2021 using technology. Let us also remember that savings can take on many different guises in this new normal. And for as long as our messages are helping people keep the wolves at bay, we are fulfilling our mandate of assisting people with money decisions. I hope you enjoyed sharing those brief snippets of our history as much as I did, please join us for all or as many of the webinars as you can. And with that, I would like to declare National Savings Month 2021 open. Thank you.
Thank you for those words, Prem. And indeed, Savings Month continues to be relevant. And I think one of the Twitter conversations which I did engage in was people saying, what's the point of saving? We don't have money. The pandemic is really hurting us. And indeed, all of us are affected by the pandemic, but more importantly, the pandemic has to lose in terms of the battle for our savings. Now, Prem did allude to the fact that we have a good relationship with our sponsors, which is Absa, and would like to invite a representative of Absa who we've worked with for 4 years, almost 5 years. I've known Thami, Cele, and he's representing Absa in terms of an opening address with over 10 years of savings and investments discipline. Thami comes with significant experience in helping businesses and individuals find ways to save. He has over 15 years in financial services, primarily in banking, and he started his career in the front line, assisting customers as he worked his way to currently leading Absa everyday banking, savings, and investment business. Academically, Thami holds an MBA and is a GEDP, both through the Gordon Institute of Business Sciences. Thami is extremely passionate about helping South Africans save. As he says, joy has to be found from getting just one individual to start a journey of saving and investing. This is because Thami passionately believes that a saving nation is an economically growing nation. Thami is also an avid follower of social media and is always monitoring and seeing what we can do better in terms of promoting savings and investment. Over to you, Thami.
Thank you, Gerald. Sanbonan Nonke Dumelang Ashe. I hope you are keeping warm wherever you are. I'm hoping it is indoors and you are actually watching us from your comfort of your home. And thank you again, for those warm words, Prem. I think we certainly appreciate them, and I think it's important that we constantly look back and see, in terms of where we come from in the journey of saving and investing, which is one of the critical elements, of a nation's building as well as the economic growth in countries. And I think we've seen evidence of those happening. But I must just state that Prem and I did not compare notes, because I think, what she's spoken about, it resonates with what I'm also about to share. But I thought, let me do that, from a lens of Absa, but also at the same time from a lens of the importance of saving in a country. Looking at the past 5 years or 4 years, I think, I guess the courting stage started 5 years ago, but I guess the actual investment, about 4 or just over 4 years. And I think we embarked, when we looked at this, on what we thought was an ambitious, exercise in saying, how do we selflessly get South Africa saving and even more? And I think, this investment for me, as I'm going to share just now, has been, for us as Absa, has been one that actually is bearing fruit. It started bearing fruit, it continues to bear fruits. And I think it's one that we need to take really great care of going forward. And I think importantly, it was always an ambition to inform, educate people on the importance of saving and investing. So it's been very beneficial for all stakeholders in my mind. I think SASI, being, I guess, call it the oldest, post 94, institution that's independent, that's not a bank or even affiliated with a bank specifically. I think in driving that savings culture, it is quite critical for us to make sure that that voice continues to be relevant, continues to be heard. And I think this is the reason why we also felt that we needed to partner in that sense. And so there's also, a benefit that we see in ordinary South Africans, in terms of yearning for learning, around money management and the options that are available to them, in order for them to improve the outcomes, for them individually, but also for their families and also communities. I think there's been quite a big, benefit that we've seen over the last 4 or 5 years as a result of. Absa, of course, I think for ourselves, fairly importantly, it's always been about how do we create platforms, and this being one of the platforms, but a far more critical one in our minds. How do we create a national platform that gets the nation talking about saving, and not only just in a specific period of July, but also becoming a normal activity that you see people do almost on a day-to-day basis, just about that as well just now. And I guess, this is how we do more in our minds as Absa to help our fellow South Africans to achieve their financial goals faster. I mean, this is about, if you don't know what you don't know, it's difficult to do anything. But if you actually get to these, to understand these tips, and call them money management tools, you get to set your financial goals, and you actually get to stick to them and grow them fairly fast. But if I actually just maybe take a minute to look back, over the last, let's call it the 5 years, I think to Prem's point, we always look to how our savings rate compared to other nations and how that's looking, and trying to see how we drive ourselves more, which is important to compare ourselves with other nations, because I think it gives us the opportunity to always improve and do better. And we also always generally talk about, how people are indebted, to Prem's point. But I think today, I really would like to celebrate all South Africans. If you think about it, since 2017, we've had over 400 billion as a country, based on the Reserve Bank's stats that consumers have contributed, or households, over 400 billion in addition in savings. So that's, from a 2016 numbers, that is a 10% continual growth in savings over the 5 years. And why do I mention that? I think 10%, if you look at it, and look at inflation, inflation has always averaged just around 6% or below 6%. But I think this growth rate for us in savings, that are being put in banks, growing at 10% is quite a significant growth consistently. For us, it's an indication that one, our voice as Absa in partnership or in association with SASI, being driven largely by SASI, has been really fruitful. But there are also, of course, other factors that we can actually attribute this to. But I think it's important for me to thank as well, returning the favor of thanking the leadership, of SASI and also the SASI board, specifically Prem, Govender, as well as Gerald Mwandiambira, who's our host today, for the consistent and the need to make sure that we continue to institutionalize a savings culture, for the country. And I think this has been achieved. This is being achieved. There's always room to improve for ourselves. What's nice with this 400 billion that I just mentioned now, which is a big growth, is that there's been other factors that we could really talk to. I think, as Prem indicated, the National Treasury has really been active and very a present voice, not only just by speaking and engaging, but also by doing things that make it different. The investment into SASI, making sure that it gets started, it was a clear indication of a need and a concern around savings. And the introduction, again, also just about over 5 years ago, of tax-free savings. What it did is it created an excitement in the market. It created an excitement for the consumers, to start saving because they could see the benefits and the incentive for themselves. What's even more powerful is that, companies or banks like ourselves, Absa, responded positively by creating these solutions that allow customers to be able, to put their tax-free savings investments. What really is quite nice for me when I talk about tax-free savings and I go to social media, I see people greeting us and saying, I greet you in the name of a topped up tax-free savings. I mean, I think I always chuckle at that, but I think when I look at it, I could see that the conversations are happening, people are sharing ideas, and also freely indicating that they're embracing this tax-free savings journey and agenda that the National Treasury has really done very well by introducing. It's a way of safeguarding our future, not only just us as individuals, but also as a country. We also saw that in 2020, I mean, I think, of course, some part of the contributor to this is the COVID-19, is that 2020 showed a much more growth in value term for savings. So again, according to the Reserve Bank data, is that on average per annum, consumers and people, they grow their savings by 85 billion. But in 2020, what we saw was that actually grew by 110 billion. There are multiple factors to that. People were restricted from moving because of lockdown, which means that there's certain savings that they would cost or expenses that they would avoid, and they would put the money away. But I also believe that people started to take the journey of saving and investing a lot more seriously, and making sure that they are able to put in money aside for unforeseen circumstances, the emergency savings, if we could call it that. I think the increase in the trend of people who are sharing their personal stories, around saving and investing, is commendable. And I think when you share your story, it makes it believable. It makes people want to follow suit around that, as well. So I guess all in all, for me, it's been a great story for the last 5 years. I mean, a great one for for us as Absa being involved in this journey with SASI, for us being the enabler of this voice, and also getting people talking around the different ways to save. Of course, this kickoff of this edition of Savings Month, as Prem has done, does require us to reflect a little bit more around the last 15 months. I mean, I think if anything, the last 15 months have been really characterized by the COVID-19 as well as the resulting lockdowns. And I think what that has done is it really has had some level of devastating impact on ordinary people, families, small businesses, as well as the well-established corporation, in my mind. And I think that collectively has had impact on people's health. The expenses to spend on health, would likely have increased dramatically. And also it just created a bit of shambles in the personal finances of some people, because this was unexpected. You can imagine a person who has not necessarily have been saving, for emergencies, and what this could have meant for such an unexpected, a situation that lasted far longer than what we would have expected. The impact on the economy has also been great. And I think it's all documented, but I think it's well noted. But I think what it also has done, just maybe staying with the individual consumer, is that it really just created an unfortunate situation where some people, especially if they had not had these buffers, have had to scramble to stay afloat, to make yourself survive from one paycheck to the other, becomes very difficult. And others, salaries being cut, and others, as a result, losing their jobs. And I think as indicated, it's safe also to say for us. I mean, I think, whilst we talk about what these challenges have done, usually these things, they start to trigger certain things for individuals. People have started to rethink their approaches around saving and investing. They've started to save a little bit more. I think the numbers, as we've indicated, speaks to that. I guess as we look forward, it's important for us to continue investing in ourselves, in terms of time. This is an investment for you listening, a time investment to make sure that you get these nuggets, these tips that that come through from the experts themselves. But I think it's important to recognize that a saving nation, and I think as Gerald had indicated, is a nation that grows economically. And I think for me, fairly passionate around that. And I think as us as Absa, and this is one of the reasons why we invest, in these kind of initiatives. So what is our commitment as Absa? I mean, I think since 2017, 2018 with SASI, This has been really a fruitful exercise. It's been one that's benefited the country, but we also continue to invest. It's one thing to talk about things, but then what do you actually do to enable people to do these things? I think the products for ourselves that we offer families and businesses, especially around saving and investing, but also money management as well. The ease of accessing these products, and I think our digital platforms, our apps, and our Absa online tools are available for our customers. Especially with these lockdowns, having been announced over the past weekend. The adjusted level 4, it means that customers need to access, their finances, remotely. And I think the enabling of these digital platforms for us, is an investment into that space. But also, with the economy being impacted, we've seen that the interest rates have really been impacted as well. So the ability to earn more from your investments, it does tend to suffer. Just as the equities, you would find that there was quite a significant decline, initially in the introduction of these lockdowns, as well as the uncertainty around COVID-19. I think us offering, our competitive interest rates and personalizing them to a customer's needs a lot more is part of what we now continue to offer as a way to help with the financial goals being reached, a lot faster. And then, of course, we continue to invest in these platforms, similar to what we do with SASI, but it is important that as a bank, we continue to invest in those types of activities. All right. So with that, I think for me, I'd like to, to echo Prem's announcement that now it's been declared that the Savings Month has started. But maybe by thanking the colleagues and also the participants, panelists that are going to be participating in this Savings Month, in the conversations that are going to be happening. I think for me, the conversation is not a partnership with SASI or a partnership with Absa, but is actually really a partnership with ordinary South Africans, with small businesses that are really looking forward to ways that they can recover and sustain themselves financially. I think that's the important investment that you are making, that you are partaking and imparting, that knowledge. So the tools are becoming a lot more critical now, especially with the confirmation again that we've moved into adjusted level 4 lockdown. And many questions would linger from many people right now in saying, what now? And that's mainly going to be the first question. And some of the questions that could come out is, how do I financially navigate myself out of this particular situation? And I think with the panelists that we have in here, and also that are going to be talking to the rest of the webinars that we've got, the themes that have been indicated, and the dates that are being provided, it's going to be important to look out for that. I think you will get quite a lot of joy around it. But I guess with the theme of saving being saving in your own language, I am a Zulu from Durban, but I think it's important, that we encourage that I can talk about my own savings, in my own language. But you might be a person who speaks Pedi, who speaks Tswana, and who speaks Chisonga, and I think you need to think about what saving means for you, not only in a call it the translation sense, but how you've grown to understand what saving means for you as a family, growing up, and also as an adult now as well, and how you think, what are the great ideas that you've seen coming out in your environment that you can actually impart around that. And I guess with that, I would like to encourage everybody to Yonga, which is a Zulu word for saving, and also to Buluga, which is a Pedi word for save, as well as Trina, which is equally closer as Zulu for save as well. And of course, I think there's 11 languages in the country, and we really are interested to see South Africans, starting to talk the language of saving in their own language. With that, Gerald, thank you so much. And thank you for the time that you've given us and you've listened to us, and we appreciate it. Thank you.
Thank you very much, Thami. And, thank you for the partnership. And I mean, obviously, I've gotten to know you in a personal capacity over the last 4 or 5 years. hopefully we won't be strangers as this partnership comes to an end. But the nice thing about the conversations we're having is that we're not talking alone. Akona, I can see you. Annelisa, Bongekile, Busi, Devashni, Dominique, Edna, Fatima, Felicia, Ipeleng, Irvin, Isaac, Itumeleng times 2, Moses and Ratikoane. You're all here and your voices must be heard. So if you're in this webinar, as much as you're participating, I encourage you today, maybe not to comment on the messaging session because it's more of an official launch, but in the future webinars, participate. But for today, if you have a few pertinent questions which really must be asked, you're encouraged to ask those questions. Also, what you can do is just simply go onto the Twitter for South African Savings Institute. It's either the Ways to Save Twitter page or at SASI Savings. Have your comments in there. And more importantly, share your comments in your language. Let's have those conversations. Let's not talk, let's not just be a talk shop. Let's really participate. Karabo, Kutwano, Lindelwa, Lindy, come on, let's have those conversations. I will recognize as many of the participants we have here. We have almost 100 people in this webinar, which is pretty good going for a launch session. Now, we've got 2 important speakers coming through as well. National Treasury are about to address us, and obviously National Treasury is the voice of government, and we need to hear what our government feels around savings and retirement reform, and also what's up, what's coming. I know Thami spoke on tax-free savings accounts. They were cool. That was 2015. What's coming? What's new? How can we encourage savings? And we've also got the MD of the Banking Association of South Africa also coming to talk around financial inclusion. Remember, language is the one way many people have been excluded in terms of saving. Now, Basil Maseko is an economist and also holds a BA in Development Studies and a Master's in Business Leadership. And prior to Treasury, Basil worked as an economist and portfolio manager at the Infrastructure Finance Corporation. He joined the National Treasury in 2006 in the Tax Policy Unit and moved to the Financial Sector Policy as the Director of Savings. Basil, we've also known each other for a few years. Please share and do encourage us to save. What's government got to share for 2021?
Thank you, Gerald, and thank you to Prem and Thami for what they said. I think they've covered quite a few of the things that I'm going to talk about. Let me just get my slides going. Yeah, my topic is going to be an update on retirement savings. So I think I'm also going to touch a bit on incentives, specifically for retirement funds and for savings in general, because discretionary savings are quite important. So I think these are this is the coverage of my slides. It's on retirement reforms up to date. It's tax-free savings accounts and retirement reforms. So what that incentives they're on, and then I'll conclude thereafter. So we basically started on retirement reforms with releasing quite a number of papers in 2012, which were meant basically to encourage households to save a lot more and to basically look after the welfare of consumers, of savers, of workers when they are still working as they go into retirement. I think there's also a discussion going on at NADLEC on social security reforms. Remember that we do have, as workers, we do have retirement plans with our employers. So not all employers do provide retirement schemes. And people who are in the informal sector are also not covered. So the social security reforms are meant to cover basically those people. So some of the topics that are covered by the NEDLAC discussions are reducing the number of retirement funds that are there at the moment. So at the moment, we have about 3,000 retirement funds, some of which are active, some which are active. But it would be ideal for the financial FSCA to look after a handful of retirement funds, which will make it easier for them to monitor and monitor the conduct of those retirement funds. So we're also looking at reviewing the annuities market. So the annuities market, when you go into retirement, you have to buy an annuity. So some of the products that are available in the market at the moment are not suitable for everyone. Remember, South Africa is not a homogeneous society where people who can look after themselves, especially in the high end. Then we have people who cannot look after themselves, especially in the low end of the income spectrum. So a lot of the funds, the retirement annuity products cater specifically for people in the high end. So what do we do about people in the lower end? And then the social security paper I've mentioned. So there's also a need for a lot of transformation in the retirement industry in quite a number of aspects, which I will not necessarily touch upon in my presentation. So these are the papers that we released in starting from 2012. These are the topics and the dates in which these policy measures were implemented. So I think just as a background, all of these papers, pertaining to these subjects, are on our website, the National Treasury website. So if you go to the retirement reform page on our website, you'll find a lot of the background information to this. So on enhancing governance, we looked at, there was a big problem with regards to a lot of employers not paying over their employee subscriptions over to retirement funds. So we made this a criminal offense in 2013. But I think we've seen that there's still a rising number of employers who are not paying their member or employee contributions to retirement funds. So I think there's a loophole there that needs to be attended to. I think since COVID, I think this number of companies that have not been paying to retirement funds has also increased. And then skills training. As soon as you become a trustee in a retirement fund, we give you 6 months to acquire basic skills on trusteeship. So this course is available on the FSCA website, and it has to be done within 6 months of one becoming a trustee of a retirement fund. And then tax-free savings accounts, I think both Prem and Thami did mention this. So we implemented this in April 2015. I think I'll discuss a bit more in a later slide. And then in 2016, we started with the deduction. The problem here was with regards to provident fund. So provident fund members were contributing to their provident funds with post-tax income. So they were not getting a deduction for the contribution they are making into their provident funds. So we made this compulsory in 2016. And then secondly, the contribution was made the same for retirement funds, for provident funds, and for retirement annuity funds. And then in 2019, we introduced default regulations. So we encourage the default preservation. So by default preservation, we mean keeping one's retirement fund in the system, in the retirement system, so that it looks after you at retirement. So we haven't made a hard preservation rule. So we've said when a person changes jobs, a person resigns and changes jobs, the retirement fund has to tell you that you can keep your fund in the retirement fund or take it to a retirement fund of an employer where you are going to, or take it to a commercial preservation fund. So money doesn't get lost from the system. So again, we introduced investment portfolios and annuity strategies. So investment portfolios are about you as a member of a retirement fund. Ideally, you ought to be engaged in what your fund invest your retirement money into. But there are people who don't make a decision as to how their money has to be invested. So those who don't make a decision about where their money needs to be invested, they get put into what we call a default investment portfolio. And then we also introduced an annuity strategy within the default fund, meaning that retirement funds have to create a strategy. So the other have to create an in-house retirement annuity or find an annuity product for you in the commercial space. So prior to 2019, you as an individual had to look for your own retirement annuity fund. So I think for a lot of us, we get into retirement, we have no idea where to go. So we find ourselves in a dilemma. Now we've given the responsibility of that creation of an annuity fund onto a retirement fund. And then annuitization of provident fund savings at retirement. So from 2021, from March 2021, all savings in a provident fund will have an annuity pocket, which means I think before 2021, the members of retirement funds would take their lump sum, 100% of the lump sum, and use it in whatever way they please. Unlike pension funds, where you get a third of your retirement savings as a lump sum, and 2/3 which you have to put into an annuity, and then you'll get a monthly payment out of that. So as of March 2021, all savings that accrue to members of Provident Fund will now be the same as those of retirement funds and of those of retirement annuity funds. So 1/3 of your retirement savings you'll get as a lump sum at retirement, and then 2/3 you'll have to buy an annuity, subject to certain thresholds. So if your 2/3 is above 247,500, then you have to buy an annuity. Otherwise, you get a lump sum. So moving on to tax-free savings accounts. I think Thami and Prem did mention it, as I mentioned earlier. So this is an account that was created specifically for people to create discretionary savings. At the moment, we allow an annual limit of 36,000. So you can have more than one account, but all of them together have to sum up to, your contribution has to sum up to 36,000 a year. And then your lifetime limit has to be a maximum of 500,000, which effectively means you divide the 36,000, you divide the 500,000 by 36,000, it will give you approximately, I think, 12, 13 years of contributing 36,000. But this amount, the annual amount is adjusted because I think we started on 30,000 in 2015. So it's gone up to 36,000 now. So basically what we wanted to do with this was for people to prepare for a rainy day and to cover any huge unexpected expenses that may come. So with COVID-19, you would have expected a lot of workers to, if they had already started on tax-free savings accounts, to use those accounts when crisis came, like Thami did mention, that a lot of people that did get into a lot of problems as a result of COVID-19. A family member might be unemployed, and then you are asked to help, or your spouse could be unemployed, and then you have to pitch in and help wherever there is a financial shortage in the family. So, like I said, it should be an ideal situation for everyone who's working to create that discretionary savings pocket. But now we've been approached by workers. Yeah, I think you might be aware there's a bill that has been presented in Parliament to allow for access for fund members to have access to their retirement funds as a once-off. We've also received a similar request from Labour to allow for this access. So this is still being concretized. It's being thought through. What we basically want to do is to create within the retirement savings vehicle, because it has worked, where employers have a retirement fund. It has worked for South Africans. So we want to create a portion of your retirement contribution going into a savings portion. So it's going to be a compulsory savings pocket, which you can have access to at any point in time. So, but I think basically, in order for South Africans to get assistance, in order to get all their financial needs met, we need financial inclusion, we need financial education, we need fintech. So I think one example of fintech is I don't have to go to the bank. I can do all my banking from home, either from a computer or from my cell phone. So it makes it easier for us to do our banking. So a number of other products are also going the fintech way in order for us to access those products, because especially now with COVID, we now cannot physically go to those financial institutions to transact. Incentives that are available for retirement savings. So basically, we allow a deduction of 27.5% of your taxable income, up to a maximum of 350,000 rands, that you can contribute into a retirement fund in a year. So this was one of the reforms that we did in 2016. So as a result of what we did in 2016 and 2021, your retirement funds, your pension funds, retirement annuity funds, and your provident funds are basically all the same. So most employers contribute about 12-15% of your taxable income into a retirement fund, and you add another 10-15%. So that leaves a bit of room for you to save a little more, up to 27.5% of your income into a retirement fund. And then I think this is my last slide. As a conclusion, not all people in South Africa are members of a retirement fund. So I think what needs to come into place, one of the discussions that's taking place at NEDLAC, is to create a fund that will cater for these people. So you have, for instance, people who work in retail, people who work in agriculture, which is seasonal, people who work in construction, which is not necessarily a job that's available throughout the year. They don't tend to save towards retirement. So a fund needs to be created to cater for those people. And then due to a lack of savings, workers tend to retire tend to withdraw their retirement savings whenever they change jobs. So we need to concretize this issue of preservation. So whenever you put money into the retirement fund, let that money serve you in retirement. And then I mentioned that there are too many funds, we need to reduce the number of funds. And then issue of governance, especially in the commercial umbrella funds, there is an issue of governance because workers and employers are not represented in the governance of those funds. And then I think I mentioned the issue of retirement annuities. So I think these products have to be meaningful and helpful towards those people who are retiring. So maybe just as a concluding remark. So i-fintech ibalulekile kithi sonke. So fanele sifundise ukuthi sathi kabanti ngetemali sitifundise ukusebenzisa i-technology ukuthi nathi sikhone ukufikele ukuthi ma-institutions, ma-financial institutions akhona ukufikelela kithi sonke. Ngiyabonga. Thanks.
Thank you very much, Basil. And indeed, I think there's quite a few nuggets from your sharing. And yes, it's exciting the fact that there is some retirement reform coming our way. And also the fact that there's the bill in Parliament which may allow the creation of a savings pocket in your retirement savings, which through your life you can access. So that's definitely good news, potentially. Obviously, it's up for debate and the public will have their say. But the fact that it's in Parliament is something which is something to be encouraged. For anyone who's in the forum, Busin Ntlane, Carol Mashaba, Chris Welsh, please, there's Q&A. You can ask your questions and we'll address them at the end. I apologize, we are running a bit late because of our technical glitch, but we will make an effort to try and pick up the time as we go along. Who else is there? Ruth Molokwe, Pumza Mali, Sinazo Vani, Susan Tobela. We see you, you're there, and your voice is going to be heard, and we thank you for joining us through this session. Now, next we have a partner of SASI who over the years has always been there for us. They are the Banking Association of South Africa. And we have their MD, Bongia Kunene, who's going to have a quick word with us around what BASA is up to. Prior to joining BASA, she was the director of the Banking Association and was Pan-Africa head of public sector banking at the Standard Bank Group. Her career has included a role as executive director at the World Bank Group in Washington, D.C., and she served in the South African government in various capacities, including 4 years in the presidency as first as chief of staff for the deputy president and as DDG, responsible for economic policy coordination. She served as the superintendent general heading the Gauteng provincial government's Department of Finance and Economic Affairs, and she also served at National Treasury. Bongi has been a member of boards, including the South African National Parks, and was chairperson of the Richards Bay Industrial Development Zone. We always we always are up to partnering with BASA and hearing their viewpoint, especially since financial inclusion is one of the topics which is always topical. Ms. Bongiwe Kunene, we welcome you. Please, the floor is yours.
Ngiyabonga kakhulu ukuthi namhlanje ngibe nani Gerald isimemo sokuthi BASA ibe la sizokhuluma ngokonga izimali ngolimi lwethu siyasijabulela kakhulu. Before I go on to my conversation, I do want to just highlight I may not be here alone. I have the financial inclusion division of BASA. So I'm going to ask that they just show themselves briefly, if it is possible. Khomotso, are you on the line?
Sorry, I'm not sure if the background picture might be bearing me. I'll try and fix it out. I am here.
Okay. The picture is you are not visible at all. So I will ask Kulegani as well. I don't know who else is here. Kulegani Mate? Khomotso, you can leave the screen. Thank you.
Was it better? Sorry, thank you, Sis Bongi.
Yeah. You can leave. Thank you very much. So colleagues, as I said, I'm here with a whole team from BASA. I thought that today it would be important for us to just talk about dimensions of financial exclusion that we are concerned about as BASA. Because in everything for the past 20 years, what we are working on is to make sure that the sophistication that one sees in the South African financial sphere is not only enjoyed by those who are financially included, but it is also a point about access to services for everyone at a price point that they can afford. And in trying to get grips with the problem, we have identified a number of dimensions of how individuals and enterprises can eventually get to be excluded. And I'm shining a light on this today because I would like us to have a collaborative approach. There's that which BASA can do because we work with the banks and we speak on their behalf when we say that we are concerned about financial inclusion, but there's that which everybody can do. And that's why I thought, let us just look at these dimensions that still perpetuate or have ability to perpetuate financial exclusion. So the first one that I'm going to talk to is gender dimension. It's not necessarily about being a man or a woman that a South African can get to be included or excluded financially. But we do know that women in our economy bear a disproportionate burden in terms of gender inequality and exclusion. This does not exclude financial services. And we want to put the spotlight here because we know that all South African banks have got financial inclusion strategies. And if there is still any lived experience by different genders in South Africa, that does not bear truth to the fact that our industry is open for both women and men. We would like to know about this. We are concerned about it because it's got implications on who has the ability to acquire and grow wealth. It also has implications on intergenerational wealth. It also has implications on consumption of different services within the financial services. And if it is true that we still have this gender dimension, it means that our economy is being hindered from economic development. And we want to make sure that we have something in our discussion today about gender. The second spotlight is on the geographic dimension. Because of our history, because of the patterns of where we live, spatial dimensions of where we live, BASA's concern then tends to be how sure are we that people who live in cities and metros, businesses that do businesses, that conduct their businesses in rural towns and economic spheres, how much do they have the same level of service, same level of access when it comes to financial services? Our primary concern in this regard is really about resource endowments and the potential for developing different spheres of our geographies. And we do believe that there are technologies that are appropriate for serving everybody equally. I did hear a colleague from National Treasury speak about fintech, and you will know that all South African financial institutions have made major strides in digital financial services. But there could still be a gap depending on where a business is being run. So we would like to highlight that as a dimension. The next dimension, which I'm not going to drill into because all the law has been taken to address racial dimensions, it's something that comes with our history. I'm only putting a word in on it in case that our lived experience doesn't speak to this, that let us address it. Please let us talk about it if there are still racial dimensions in who has access and who is excluded financially. Then very closely associated with that would be the socioeconomic status. We know that financial inclusion has meaning in terms of what level of education individuals hold, but also in terms of businesses, enterprises, what sort of services are they consuming, and that exposure can be affected by socioeconomic status. And in terms of the enterprises that we are concerned about when it comes to business, we know that at a high level, high net worth individuals, clients of banks that sit in the space of investment and corporate banking services, those tend to have the level of sophistication that is quite high. And inadvertently, some people who would sit in the financial challenge group would either be in group services or in spaces of retail banking. And if it is still true that there are challenges there, we also want to highlight that dimension and say it is something that has to be dealt, because there are differences between small and large enterprises, but those differences should not inadvertently create space for financial exclusion. It is also true that the more formal a business is, the more access it has to financial services. And for informal businesses, we've got a number of, we can stratify what really worries us. It would come in terms of the registration of that business. Is it registered? Does it have support services in the way in which it is registered? Does it have even intermediation in terms of how it interacts with its clients and service providers, including banks? Does it have a way of identifying residentially clients who are either citizens or residents in the country, and those businesses that are currently owned either by asylum seekers or people who are holding different status to South African ID holders? Even that level of detail concerns us as BASA, because we really want, when we speak of financial inclusion, to have the sophistication in the South African financial services being enjoyed by anyone and everyone who is a citizen in South Africa or who has resident in South Africa. So I would like to conclude by saying, having shined a light on who is likely excluded, this is a flip side of saying, can we all collectively talk about this? Makunezinto enbonayo ukuthi sisele emuva ngazo njengeBASA, siyanicela njengomphakathi nabantu esisebenzisana nabo ukuthi make sikhulume ngalezi zimo, sibone ukuthi sizoqhubeka kanjani ukubambisana, ngoba impumelelo uma ngabe uphathe into eziphathelene nokonga isezandleni zethu sonke. Ngiyabonga.
Thank you, Mama. And, you know, it's been a pleasure to have you with us. And hopefully this is just the beginning of more partnerships and collaborations. As you may or may not be aware, BASA does also run through July the Star Savers campaign. And unfortunately, obviously, with the schools closed, that will impact on that. But BASA has always come up with innovations and partnerships that help the growth of the South African savings environment. And when we talk about youth, one of the partners for our Savings Month this year is indeed NSFAS. So we will be having NSFAS on the webinar next week. And it's a discussion which probably we can round table with BASA and SASI going forward. Coming up next is the good, the bad, and the ugly with regards to the South African economy. We'd like to invite Jeff Gable, who's the head of FICC Research and chief economist for Absa. His top-rated analyst team covers fundamentals-based macro and market strategy research across sub-Saharan Africa. Jeff joined Absa in early 2007 from Barclays in London, Churchill Square, and having spent his earlier career as Deutsche Bank in London and at the IMF in Washington and at the Bank of Canada. Jeff, I do not envy you. We're in lockdown level 4 or 5 light, or things are just, we're stuck at home and it's almost feeling like back to square one. What does this mean for the economy? And in terms of the Absa house view, where are we going as an economy? Jeff, the floor is yours.
Gerald, thank you for that handover, and thank you everybody for sharing the launch of the South African Savings Month. It's such an important topic. We've touched earlier with previous speakers around the idea that saving seems to be particularly difficult in a time when the economy is under pressure, where households' budgets are taking strain, where people often are worried about employment. And so in some sense, it sounds quite rich, but we know that savings is most important during the difficult times, even if it feels easiest when things are going very smoothly. My role here today is just to talk a little bit about where we find ourselves as the South African economy suffering from a big downturn in 2020 as a consequence of the lockdown restrictions, and sort of what is the outlook going forward. And for that, I want to take my time to share thoughts around kind of 4 or 5 broad topics. So the first of them, of course, I'm going to touch upon COVID directly and really sort of sound the alarm around just what the third wave is doing to us here in South Africa. The second thing I want to touch upon is just where we're seeing sort of signs that the economy is starting to recover from the strains of last year and further lockdowns this year, but where the real pain points are. Then I want to talk about kind of beyond COVID. Where are sort of the speed limits for the economy? What prevents us from really accelerating quickly once we get on top of the pandemic and looking towards a greater future? And then, of course, this is savings month. And so whether you're on the saving side of that or whether you're on the borrowing side of that, interest rates are really important. So I'm going to share some thoughts there. And all of that, I hope, is going to be about 12 or 13 minutes. Of course, everyone on this call will likely have faced off to economists before, and you'll know, one, we're not always the snappiest of dressers, but two, we love slides. And so for those 4 or 5 topics I want to touch upon, bear with me, I'm just going to share a screen here, and that'll help sort of put some numbers perhaps to the figures that we're discussing. So the first topic, as mentioned, is really just around where we are in COVID itself. And so in the graphic on the left, you see new infections from our first wave starting in early March of last year and then really culminating through the second half of June and July. Then the second wave that started to take shape sort of as we went away for holidays in December and then really crested in a challenging way in January and February, and now then in this third wave that we're in currently. Of course, each of these incidences have been very different, right? Globally and locally, we know more about kind of what works in terms of trying to dampen the wave of new infections. We know more about what parts of restrictions really hurt the economy quite significantly without providing much health benefit, and vice versa, which things we can do that don't impact the economy too much, but really provide some better health outcomes. We also know that over these 3 waves, the variant of the virus that we're facing is also evolving. And there, sadly, with each wave, the variant seems to be getting more aggressive. So easier to transmit, more likely to generate significant illness. And the health experts at least ask us not only to be very careful with our behaviors now as we roll out, you see a 4th or even a 5th wave. The numbers that we see in front of the screen right now are useful, but they sort of paint a picture where really the third wave isn't that much serious to the second wave. We got through the second wave as an economy, and the personal stories in that space can sometimes be challenging. But surely we just use the same things that we did before. The thing is, it's not quite as simple as that. So you will have seen in the press, you will have seen from experts, you will have seen the communication from President Ramaphosa and others, that this third wave really does look quite a bit more serious than the first 2. The numbers that you see in front of you in this graphic are just for the province of Gauteng, where we really do seem to be in the midst of a very significant health challenge. So the graphic here compares the first 2 waves, wave 1 in red, wave 2 in orange, with this third wave, the number of daily new infections that we're seeing. And you can see that they look wildly different from one another. And of course, this is placing significant pressure on the hospitals and healthcare facilities. And as you start to run out of beds, that's exactly when we get sort of family chats with the president announcing new lockdown measures and extolling all of us to really be cautious in our behaviors and safe. And that's one of the key messages around the economy. But right now, the great news is the vaccine rollout is really starting to pick up pace. The hope is that we'll start vaccinating people in the category of 50 and over, having reached many people 60 and over in the wave that we've been working on right now. But really, it's still very much about the decisions, the personal decisions that all of us are making that will have the largest impact in trying to dampen the level of infections and the transmittability of COVID. And by doing that, allowing as much of the economy as possible to continue to go on and provide jobs and provide incomes and others. So moving from the health stats, just what are we seeing for the economy broadly now? And here it's quite interesting. So one of the best data sets that we've had over the last year, a year and a bit, is also maybe one of the ones that's a little bit creepy as well. The data comes from Google. And what they do is they track movement. And so when we were all stuck at home, as was the case in this graphic, it starts from February of last year. The zero line is sort of what was normal behaviors before COVID and restrictions hit us in South Africa. Well, remember in late March of last year, and certainly into April, we were essentially told to be at home unless you absolutely need to go to the shops to buy food or medicine from your family, or if you're an essential worker. And so the data tracked by Google that looks at movement of people showed almost exactly that. So the orange line here are sort of visits of people to grocery stores, supermarkets, and pharmacies. The red line is the use of transit. So that's everything from using your own motor vehicle, and you get captured on sort of the major arteries, whether it be the big motorways themselves or major thorough roads. Black line here is other retail. And what this was showing is that when we had level 5 last year, that in terms of sort of non-food retailing, in terms of transit, about 80% of all activity in South Africa stopped dead. And you can imagine the impact on the economy. That was pretty significant. The numbers along the bottom here, the 5, 4, 3, 2, 1, indicate the level of lockdown restrictions that we were in the economy. And you can see, and it makes sense, that as the restrictions eased from level 5 through 4 through 3 to 2, sort of more normal behaviors sort of returned. People were going back to not just to buy food, but we're also going back to other types of retailers. You started to see the roads get busier. People were doing the school run and others. We see at the end of the year, as restrictions got tighter, movements of people decline. And then the restrictions ease again until where we are currently. Now, what does level 4 mean in this space? So we've been in level 4 only since Sunday evening of this week, really Monday, a handful of days. So we don't have data from Google yet to show just where the pressure points are on the economy. But the first of the circled areas show us what level 4 looked like last time. And what level 4 looked like last time was for things like other retailers, about half of a sort of footfall, people visiting retailers that weren't about food and pharmacy, had disappeared. Transit routes itself, right? About 40%, about 60% of all movements of people disappeared. And so our expectation is that we go into level 4, right? We're going to see significant further restrictions. It's going to make everything in the economy feel just a little bit more difficult. It'll place more pressure on incomes. It's going to place more pressure on jobs. And so in that environment, savings and resilience and really managing a household budget becomes all the more important. When we move from sort of thinking about the movements of individual people, and we think instead about where we are in terms of the big chunks of the economy, whether it be agriculture and mining, which are the first 2 lines in this table, whether it be sort of manufacturing or the construction sector, some of those things that are in the middle of the table, what we look at as a research team is try to understand where those sectors are now as a consequence of COVID, and what the next couple of years is likely to look like. And the way to read this table is we've said just for all of these sectors in 2019, so the last data before COVID, the level of activity, how much stuff was being done there was 100. So for any number over 100, it means even more activity. That part of the economy's grown since 2019, so that's good news, and it's highlighted in green. You can see, for example, that agriculture has done particularly well, not just last year, but this year as well. By the end of this year, we think the agricultural sector, at least output in that sector, presumably that will pull in some job creation as well, will be about a fifth, almost 20% bigger than it was in 2019. That's fabulous news, though it's worth noting that COVID has little direct impact on agriculture. The agricultural sector itself is really very much, frankly, about the weather When the rains come with the right amount in the right times, the sector booms. And when that doesn't happen, certainly as we saw 3 or 4 years ago, the sector really struggles. So this is less about agriculture doing better under a COVID environment and more just about external conditions being favorable. Still, it's one of the highlights for the South African economy right now. The mining sector as well, right? At least by the end of this year, we think is back to the same level of activity we had pre-COVID. Doesn't sound like a great reason to pat the mining sector on the back, but as compared to other sectors, it's a very strong performance. But again, mining is less about social restrictions and about sort of the demand in South Africa and much more about things like prices, and certainly the price of gold and platinum, the price of iron ore, some of the things that South Africa is a key global producer of have been really very strong. And so that's helped that sector be more resilient during this downturn. But there are a number of sectors here, and I'm sure you've flipped down the table already, that are struggling in a much more significant way. Think about the construction sector, for example. If you have visited one of the DIY retailers over the last few months, you know that stuff is flying off the shelves. So perhaps as people are spending more time at home, some of the projects that have been waiting in the wings for some time, those projects are now getting more attention. Could be that as interest rates have been very low for the last year or so, it's just making it easier for consumers, for households to borrow a little bit today in order to make those improvements on their home. But the construction sector beyond that, the broader construction sector, where you're thinking about big projects, big infrastructure, the water and electricity that we need as a country, the housing and new hospitals and new schools, that certainly has slowed significantly. Government, frankly, has very little money for these sorts of projects right now. And if we live in one of the major urban centers, and you look around at some of the high-rise buildings that were being constructed, for sure, those buildings that were pretty well progressed before COVID are probably getting finished. But the likelihood of new buildings being started in this environment of so much uncertainty is probably pretty low. And so we see the construction sector having lost about a fifth of its activity last year and recovering only very, very slowly. And why this matters, right? Why this matters is because sectors that are growing quickly are likely to provide good jobs and more jobs. Those that are really struggling in the table, those that are less than 100 in the years ahead, are sectors that aren't recovering very quickly, where jobs are going to remain under pressure. And through those jobs being under pressure, it means households, sort of the families that rely on those incomes, also really taking some strain. There are going to be a couple other really important factors that also perhaps hold us back a little bit from just what the economic recovery is going to look like once we manage to get more of the vaccination program rolled out, once we get closer to herd immunity, once we're able as an economy to get a little bit more towards the new normal as compared to this crisis environment we're in right now. One is just around how quickly jobs recover. So the graphic in front of you right now, the orange line that sits there sort of paints the picture of what happened last time South Africa had a pretty sizable economic downturn. That was at the end of 2008 and early 2009. Remember the global financial crisis and how it generated in South Africa the first recession in the post-democratic era. There, if we just look at the parts of the jobs market, that is the private sector, so not people employed by government, and the part of the jobs market which is formal employment. So not the millions of South Africans that have very good livelihoods in the informal sector, but just private sector formal employment. We see that in the downturn in 2008, 2009, about 750,000 jobs, about 10% of all jobs in those sectors in the economy disappeared in 4 quarters in the span of a year. And it took more than 4 years of the economy growing again to get those jobs back. So that's real strain for households. And remember, of course, each and every year, it's not just about recovering the jobs that you had before, but hundreds of thousands of South Africans graduate, whether from matric or from universities. Every year, we get a huge inflow of new young people into a labor market, hungry to be able to work and to be able to provide and build a secure economic future. And real challenges is to just, what happens when the economy cannot provide them. Well, this time around, the nature of the downturn, a global pandemic is very different from the global financial crisis, but the initial hit on jobs has been just as stark. So in the second quarter of last year, again, looking at formal sector, private sector jobs, about 900,000 jobs disappeared almost overnight. And whilst we've seen some of those come back in the next few quarters, one of the things we worry about as economists is just the economy's ability to regenerate jobs quickly. We just haven't seen it in the past. And of course, if it takes several years to get that level of employment back, that's a headwind, because each of those consumers that now is struggling for work is a consumer that otherwise would have been spending, providing more employment to the retail sector and others, and now it isn't. And then, of course, one of the big headwinds that we have is just around electricity provision. So it has been since January 2008, well over a decade, that South Africa has been in the situation where we have some version of a hard limit as to how fast the economy can grow, because we simply don't have enough electricity to go around. Now, sometimes we see that in a very obvious way. We have load shedding. You come home, look to prepare a meal for your family, and you're doing so in the dark, and the stove doesn't work. At other times, the lights may be on, and it feels like everything is going back to normal, but the country's still under a critical limit. And that makes it difficult for businesses to make the long-term decisions necessary to greenlight investment. And that investment would generate new jobs and new growth. Well, in an environment where electricity supply is very difficult to be certain of, it's hard. And that's going to provide sort of a big headwind for growth in the years ahead. The graphic is looking at energy availability factor. That's Eskom speak for just what proportion of Eskom's generating fleet, all the power stations, what proportion of them is actually in a position to provide power to the grid. Back in 2017, so 4 or 5 years ago, it was more than 3/4 of all the power stations, almost 80%. And even in that space, we know that electricity availability was quite tight, particularly in the winter months. In 2018, more breakdowns. In 2019, more breakdowns. In 2020 and 2021, as we sit here today, barely 60% of Eskom's fleet is actually in a position to provide electricity. That generates load shedding, that generates the uncertainty. And for all of the positive work that the Eskom leadership and its partners within government and the new excitement around private sector participation, as much of all that's happening, we are a long way away as a country from being in a position to really have enough electricity to go around. And so the economic recovery here is not just about COVID and vaccination and dampening the wave, but it's also about finding jobs. It's also about providing the infrastructure, electricity here, water, and others, to ensure that the conditions exist for the economy to grow. And then my last slide that I wanted to share with you is just around interest rates. Of course, if you are a borrower, if you have a bond on your home, or if you have a car loan, it won't have escaped your attention that last year, as the country slipped into this very weak period, the Reserve Bank was able to cut interest rates dramatically. And so the prime rate in South Africa fell just before COVID from a figure of sort of 10% plus minus down to about 7. 7 was a number last seen in the 1960s. So this, for people with debt existing already, in particular those types of debt that are linked to prime, at least this helped consumers by putting money back in their pockets. For savers, of course, the story is the inverse of this. If you're saving, well, the returns to that saving got a little bit less in this space, but it still does provide an environment where you are better able to manage strain on your household finances if there's a little bit in the bank. What are our expectations as Absa research for the periods ahead? Well, I'm sorry to say it's not that interest rates are likely to fall further. It's that interest rates are likely to rise. Financial markets are pricing that in. As Absa research, we're expecting not any interest rate moves from the Reserve Bank when they meet in July, or indeed in any of the meetings later this year. But certainly we expect interest rates to start to rise into 2022 and 2023. So in that space, the message is that planning ahead is key. Debt that might feel very inexpensive today might well feel more expensive tomorrow, whilst for savers, any money in the bank now is likely to generate an even higher return in the periods ahead. In terms of formal slides, I'm going to leave the slideshow at that point, but I want to just share, I suppose, the summary itself. And that is just the points that I made around COVID, right? It's a health challenge, but it's also an economic challenge, right? And the best thing that all of us can do is help to dampen the wave to ensure that the economic restrictions can be as modest as possible, keep ourselves, our families, and our colleagues safe. The economic recovery, when it comes, is going to be uneven. Some sectors are going to be doing better than others in that space. And it's going to be uneven in part because there are some real limits as to just how fast South Africa can grow. We talked about electricity, but also about just how long typically South Africa takes to replace jobs once they're lost. And then the last slide I shared with you was around interest rates and the warning, I suppose, for those borrowing that interest rates are likely to rise from next year. And is it promise? I don't know if I want to use that word too hard, but sort of the potential excitement for savers that what feels like a low interest rate that you might receive on your savings now, certainly we as Absa Research think is going to be higher in the periods ahead. And so it's something there to look forward to. Those are the points that I wanted to make on the economic outlook. I'll finish my talk there. But again, thank you very much for this opportunity to speak on such an important topic. And I look forward to engaging throughout South African Savings Month throughout July. Thank you.
Thank you very much, Jeff. And some key points from Jeff is that interest rates are likely to start to bounce back up going forward into the next year. So if you are servicing debt, it's going to get a bit more expensive. If you're someone who's saving, that's something to look forward to. So another key point which came through is the job losses. How long will it take for them to come back? And I think that's really the scary part in terms of how quickly can we recover those jobs and how quickly can Eskom get us the power we need to grow the economy. We've just got two more speakers who are just going to give a quick summary of what they will be speaking about, but please hang in there. We're still running behind time. Ruth Molokwe, Sibongile Kulu, Sinazu, Susan Tobela, Tanaka Saungweme, Tabo Mabaso, Tato Moagi, Wendy. Hang in there. Two more speakers. And just before we go into the two speakers who are coming up, I'm going to share some information on the webinars which will be coming through the month of July. And just hold on while I share my screen. Okay. During the month of July, we will be running a number of webinars, and we're just going to have a quick share in terms of the two speakers who will be sharing in July. But during the next month, we've got our first webinar coming through next week, the 7th of July at 2:30 in the afternoon. We'll be talking student savings. We're going to have Andile from NSFAS joining us, as well as a youth speaker who will join us in terms of digesting and trying to dissect how hard is it for youth to save and what are the big challenges. Kakiso Mamabalo. Sorry, I'm not Andile. Kakisho Mamabalo from NSFAS, who's their spokesperson, Chris Phillip and myself will be talking around student finances. Can students save? Is it fair to even ask them to save? And hopefully we'll also get a young person in there to share their perspective. On the 14th of July, Stokvel Savvy, we're going to talk Stokvels. They're back in fashion because times are hard. People want to talk and share and save money together. And we're going to have a few words from Palisa around the Stokvel environment and what she will share. She will be joined by Tsepo Moloi from Stokvela and Lingdi Makamo from Absa Bank. Our next webinar will be on the 21st of July, 2:30. It's all about business and small businesses, especially. With those 900,000 jobs which have been lost, perhaps there is an opportunity to start your own business and become self-employed. We're going to have Hilary Mangwanya from Absa, sharing with us, as well as a small business owner herself, Guguletu Mfupi. She's familiar to us as a broadcaster and an entrepreneur, but she's really a business owner, and she has her insights on where she sees business going, the digital economy, where the future lies. And we will be getting another speaker for that one. So do watch our announcements closer to that date. Our final webinar will be on the 28th of July as we look into Women's Month. Women carry South Africa. Women carry families. Women are dealing with husbands and partners losing jobs or reduced income, or themselves being in that space. Women are really mompreneurs, running companies and running their finances whilst also trying to put bread on the table and love their family. So we got a women's perspective from Prem Govender, our chairperson, Esther Mukumbo, who's also going to share about what she will share about quickly after me just now, and also Nombuso Mpali from Absa. So essentially, you know, that's something for us all to look forward to going forward in terms of the webinars that are coming up. Our last two panelists, and thank you for bearing with us all this time, but our last two speakers are really going to share what they will be sharing with us when they join us on their particular webinars. First to speak, we're going to invite Palisa Lengolo. Palisa Lengolo is a finance professional with over 10 years experience in investments, banking, and accounting. She holds qualifications in financial information systems, accounting science, and a postgraduate in business administration. She was named amongst the 200 young South Africans, top 200 young South Africans in 2020. And she's written a book called Stokvels, How Can They Make Money Work for You? Palisa, please share in terms of briefly what you'll be sharing on the day around Stokvels, and we look forward to your webinar.
Thank you so much, Gerald. I'm very privileged to be part of this great initiative. Nake Palisa Lengolo, and one of the things eke thabetseng hore SASI e tlo etsa today ke hore re tlo bua ka ho boloka tjhelete ka leleme la haeso tsa mona South Africa. So I'm very excited. As you know that stokvels are still the proudly South African way of saving, and during these times we need to find ways that are modern and that are adjusting to these times. So basically around the webinar itself, we're gonna be covering the basics of setting up a stokvel in these modern times, how the modern stokvels work, how to be stokvel savvy, and the tools that are out there, especially with a lot of stokvels going digital because of not being able to meet physically anymore. And most importantly, the great evolution of stokvels investing in different industry and really making an impact in the economy, and how in these days of COVID-19, our stokvel members are assisting each other with this model that has been around for many years, but how are they using it in these today times? And so that will be the stokvel savvy and the stokvel evolution, what we're going to be looking around there. I'm really excited that we're going to have different voices around it, the digital part of it from Tebo, from Stokvela, and the banking side of it from Absa, and the education side from me. So I'm really looking forward to that. And as what I really like mostly about this year's theme in saving your own languages, and in stokvels, most of the stokvels is very much diversified around all the languages, and actually with research showing that there is more South Africans that speak other South African languages in stokvels than just only English. So bendicela abantu abakwizitokfela baze bakwazi ukuyijoyina le webinar, sifundeni ukuthi makhe sisebenzisane kanjani njengakwizitokfela, and ibile njena re batla ho boloka tjhelete ke nngwe ntho e re nka tsebang hore re hodise tjhelete tjhelete ya rona ya ho di-stokvela le rona re ipone re na le mekgwebo re sebedisa di-stokvela tje ka bathong ba di-stokveleng. Thank you, Jared.
Thank you, Palisa. We look forward to that one. And I think, you know, one of the things which has been going on is stokvels are diversifying, going into properties, going into more complex investments. And we want to try and find out, is that real? And also the usual suspects, the Ponzi schemes and pyramid schemes calling themselves stokvels. So you will have a lot on your hands, and we look forward to your webinar. Last but not least, this morning, we've got our final speaker who's going to share on her webinar. And her name is Esther Mukumbo. And S is a financial literacy enthusiast, popularly known as S. So we'll call her S because she's part of the family now. She loves to share her own personal financial journey in the hope that it inspires others to start their own journey of financial freedom. I think she started off when she used to blog and talk about how she got herself out of debt. As a working professional who has experienced her own financial challenges, from being in debt to building healthy financial habits and being able to accumulate an investment portfolio. She's also a mom, so she's going to talk from the woman's perspective, launching us into Women's Month, how she can empower women to take charge of their own finances and households and navigate the impact of motherhood on a woman's finances. And she's not just all talk. She holds a master's in development finance and is a postgraduate diploma in business administration. And she also has a BSc in microbiology and biotechnology. Maybe you should be finding us the coronavirus cure. How, Esther, the floor is yours.
Thank you, Gerald, and thank you so much for each and everyone for tuning in today. So in terms of what I'll be sharing during my live webinars centers around financial resilience and how can we as women build up financial resilience as we look towards the month of July and Savings Month in general. Resilience, when you look at resilience, it's the ability to recover quickly from a financial setback. And we know that women make up 51% of the South African economy. 40% of households in South Africa are headed up by women. They're the main breadwinners. I'll be sharing things around, elements to build up your financial resilience during this tough time. We know that COVID has had impact on people's finances, on people's ability to earn income. And some of the things that I'll be sharing will be centered around building financial resilience. An example will be being proactive and being intentional in terms of your money, just in terms of your budget, being intentional about stretching your rand. We know it's become very key now in terms of how you budget, where you shop during the month, and how to really get value for your money in terms of the rand. Other things, the second portion will be having some form of savings, building up a savings, an emergency savings account. Even if you put in 100 Rand, 50 Rand, but over time it compounds and it can allow you to better manage a financial shock that can happen in your life. The third aspect is having financial goals. I think all of us have, long-term financial goals, being able to take our kids to tertiary as an example. I know a lot of mothers have passion around that. How are we going to take our kids to school? How can we start doing things early so that, we build up the financial muscle to get us to the point of where we want to be in terms of our financial goals. Lastly, having a plan. When you have a plan in place, you have options. So how can we really center ourselves so that we build financial wellness and financial resilience over a period of time? It doesn't take, it's a marathon, it's a long-term thing. It's not only once off, but it's building that financial muscle, just like how you exercise to become more fit. Being financially well takes time and takes building that on a monthly basis, building your financial resilience. It's a couple of habits that we need to get into. So that's what I'll be sharing, Gerald, during the month of July.
Thank you very much, Esther. And really, that's our July Savings Month officially up and running. We've got 2 or 3 questions which we will direct just now, but we will have a quick vote of thanks in terms of thanking everyone who's managed to sign up today. Everyone, Tina, Teresa Vika, Susan Tobela, Pumza, Olga, thank you for joining us, and please do register for the other webinars on waystosave.co.za. Mziwenzi Konzo, Maseko, Martin, everyone who's been in this session, thank you for joining us. I'd like to thank all our panelists, starting with our chairperson, Prem Govender, for always being there, supporting SASI and continuing that voice of increasing and promoting that savings culture. Thami, Cele and Absa Bank for partnering with us for the last 4 or 5 years. It's been a really rewarding journey, and we've managed to grow the numbers in terms of the conversations happening around savings, and the proof is in the numbers. We're seeing an improvement in savings and the savings culture in South Africa. I'd like to also thank National Treasury, Basil, Maseko. Treasury will always be the key voice around savings and investment. And that bill which is coming through is very important for South Africa. And the 2 questions are actually for you, Basil. One was, will the Provident Fund annuitization be done in retrospect, or it's only from March 2021? And the other question was around, will the limit of 500,000 per person in a lifetime limit be raised anytime soon? I'd also like to simply thank Basa, your breath of fresh air, Bongiwe. We look forward to partnering with you and new projects and going forward. Just like we started partnering back in the day with Teach Children to Save, which became Star Savers. We've got other ideas, new projects, new initiatives which we can take to market, which will encourage that financial inclusion which you spoke passionately about. We'd also like to thank Jeff Gable from London, Canada to South Africa. We thank you for your voice. We thank you for giving us not the scariest economic presentation I've seen, but giving us hope for the future in terms of looking ahead at what's coming. Esther and Palesa, thank you for your throw forwards. Esther, we look forward to the mompreneur and the women, showing us how we can improve our finances. And also, I think there's also that psychological element. I think we must also address, how you pick up a man who's lost his job, or how you encourage him to man up again. And lastly, we also had Palesa coming through. Palesa, Stokvels, they will never die. They're always more popular. And we chose you particularly because you're a young voice. Stokvels aren't for gogos and nkulus anymore. Stokvels are for young people, and they have a fresh new nuance using technology from Stokfella. So everybody who's joined us, thank you very much. And behind the scenes, Tamarin putting this together, despite the 10-minute glitch when your heart was literally in your hands. And when we could see that you managed to bring it all back together. Thank you very much for your support. This is just the beginning of the month. The interviews are starting. Prem, you've got an interview in 10 minutes on SAFM, or it's SABC Africa. And everyone else will be taking on the interviews. Thank you very much. July Savings Month is up and running. Basil, just those 2 questions, if you can unmute yourself and have a say. Annuitization, is it in retrospect? And also the annual limit, will that be changed?
No, the annuitization won't be retrospective. It will start from March 2015 and will only be applicable to people who are less than 55 years old, who would have accumulated more than 247,500 by the time they retire. And then second question was on the 500,000 limit. So that limit is unlikely to be changed. The simple reason thereof is we targeted the tax-free savings accounts for largely low-income to middle-income people. But what we've seen is, I think, a lot of high net worth individuals are using the system when they have other avenues to save. So it's unlikely to be changed if anytime at all, or if anytime soon. So yeah, it's unlikely to be adjusted. Thank you.
look, again, a nugget we're getting there, that an initiative by National Treasury to help the lowest income earners to save and accumulate interest aggressively has been abused by those who can easily save 36,000 Rand a month. Unfortunately, these are the recurring challenges which we have around savings, that when something is done for those who need it, it's those who don't need it who see the real advantage in it. Similarly, with the retirement annuity deduction from SARS, it's not the people who need it most who are taking advantage of it, but merely those who can. But those are conversations we always can have. Victoria, thank you for joining us. And Wendy, everyone who's been online, my last word is simply to say, go on to @SASI Savings or Ways to Save, or our Facebook page, and have your say. I think if we talk about savings in your language, we need to hear your voices. Make your comment, discuss your challenges, and let's have that meaningful conversation for the month of July. From myself, Gerald Mwandiambira, and the SASI team, we thank you and look forward to a powerful and inspiring Savings Month.